Hello, everyone, and thank you for joining me today for another episode of Financial First Aid. Today, my guest is Mr. Stephen LaBoi. He is an expert on insurance. He has various programs and policies that he can offer, and I'd like to have him on the show today because as you're emerging from bankruptcy, there's some things that you need to know in order to fortify yourself financially. And certainly, life insurance and some of the other policies and products that Mr. LaBoi offers can speak to that. So he's going to give you a little bit of his background, and then we'll jump right into the topic that he'll be discussing with us today. Thank you for being on my show, Mr. LaBoi, and give me some idea, and my audience some idea of your background.
Thank you, and I appreciate you having this platform. It's very important that we have financial resources as well as information and education in all situations. We have a lifetime of needing access to capital or having cash flow or having needs to manage our finances. So situations do arise. So again, thank you. My name is Stephen LaBoi. I am a nationwide strategist in the insurance realm, and I'll speak to that a little bit more as we get into the conversation. But our goal as a company is to help unearth the mystery of insurance and its complexity, the specificity of life insurance and its option nature versus the mandatory nature of other insurance types of policies that people own, and the history and the longevity of these companies and why they've been in business so long and how they help people actually close the wealth gap. So we get into a full array of money management strategies and how to insert these, what we call contracts, into our finances.
Great. Okay, good. So explain to me, I'm sorry, just give us a little bit of your background. When did you and where did you start and how did you get started in that?
Makes sense. I have a finance degree from Morehouse College, which goes back about 40 years. I've always managed my own money, been in sales for over 35 years in marketing, mostly in young startup companies. So you got to be very prudent on how you operate as well as manage money. And I've owned my own businesses for the last 8 to 12 years, franchises, as well as startup companies from the ground up, all of which create an environment where I have to manage my own money. And as a result of all of these experiences and exposures to various industries, I decided to go into finance because I realized that a lot of people don't look at their books and money the same. We have a proclivity of looking at this from a very generic and very commonsensical type of way of paying attention to money. And there's so many different ways to handle this. So yeah, my background has been finance all the time, but mostly business.
And that's really good because the podcast really looks to the audience that are entrepreneurs, not just people who have filed bankruptcy, but entrepreneurship in general. So having that background is great to know. And you can certainly offer perspective on this whole topic that so many other people don't have. So in your, having your various businesses, what kinds of things did you learn in terms of financial literacy?
Well, with business, what I learned, and it's transferable to individuals, is tracking money. There's a reason why businesses have bookkeepers and accountants, which is an intricate part and probably one of the most important parts of owning a business, is because they give you a footprint as to where your business is. You can forecast where your business is going, and you can see where your business has been. Well, put that in the context of an individual, it's really the same thing. We just don't call it accounting or bookkeeping. A lot of us only see our tax people once a year, but we operate all year in an effort to sustain and make money. And then when we see this person or the bookkeeper or what have you, we hope that things turn out right. Why aren't we getting proactive like businesses? And when I came to that conclusion, I realized that if I ran my personal life like I was opted to run my business with the liabilities and the risk management in business, then my personal life would probably be 10 times better financially than a lot of times it could be with us being haphazard and kind of in a guess mode for our personal, finances, being compelled to be more consumer than we would be being a producer or a business person in our personal life.
Okay, so that's good to know. So you're one of the things that you would offer people is to structure their personal finances kind of sort of like a business. You want to be profitable at the end of each year when you do your personal finances.
That's correct. I wrote a book called Build Your Human Equity Line of Credit. And one of my coined phrases is to become positively selfish. So the word selfish in general terms gives us a negative connotation about most people, most times. But if you become positively selfish regarding your finances and regarding you, you will start to understand how to take the leverage back from financial institutions, from banks, from funding companies, from outside entities that are all trying to get at your finances. Even people that tell me they procrastinate when it comes to saving money from different services that are being provided by them, cable companies, cell phone companies. People don't take advantage of a lot of times that you can actually create savings by taking advantage of their programs. And that $100, $200, $300 or what have you can go back into your portfolio as a positive financial benefit and help you build your personal portfolio so that you can control your destiny.
Wow, that's good information. So how do we work with a company that like a Nationwide or someone like you who's an insurance agent to not just have insurance, but also be proactive and develop a game plan, if you will, to secure our financial stability and secure our financial future?
Well, I'll say it to you like this, and I often get into a little historical background on insurance itself so that people understand a perspective.
Good.
Insurance as an industry has the largest amount of agents in the world out of any industry ever, because you can be 18 years old and get an insurance license. I say that to understand differentiation. Differentiation means that every agent comes from a different perspective, comes from a different intention, has possibly different products, creates different outcomes for their client. Some are maybe even more selfish in nature in terms of they run their business to make money versus helping the client benefit going down the line. So in essence, a lot of times it can be buyer beware how you build and sign and engage these contracts, which are called policies. So if you can find an agent who is, basically contracted to teach you, help educate you, help bring you up to speed as to how these systems can work for you, which then can create a benefit where it comes to your money management, where it comes to signing these, what I call long-term contracts, as we look at life insurance as a long-term vehicle. A lot of us look at it with the benefit being to another generation, which that's not always the case. So in essence, you can find an agent who will help open your eyes as to how to create a benefit for you and your family. Most times, those types of agents as they educate you, help you find better and bigger outcomes, and that agent still gets their benefit or their commissions from it. So it's a win-win versus you having no knowledge, you being sold or transferred some kind of a contract, a policy that you have little to any understanding of, and the agent then walks away and you walk away not really understanding what benefit or if any that you might have. So in essence, again, the industry is huge. It's up to you as a client to dig in. And now we have the internet, which gives you another layer of education or information to help you understand that these wealth building tools can actually be in your benefit. So I'm trying to build a bridge to people to help them say, look, if these industries have been around 200 years and other cultures or other people have literally benefited from them tremendously over the generations, I need to dig a little deeper to understand why and how. And I need to find an agent who is malleable and who helps clients get that education. Okay. And that's what the LaBoi Insurance Group is all about, you know. So we try to make sure that we share in the understanding of this, because you will own it for 30, 40, 50 years, you know, longer than a mortgage.
Right, right.
You know,
that's true.
Longer than most contracts that you ever sign, you will own a life insurance policy. In essence, you can't go back and re-sign it or repurpose it if you don't know what you have. That's our position.
Okay. And so one of the objectives of your company and you as an agent is to not only just sell a policy, but also get your client to understand how this can be a vehicle to build wealth. Okay.
Yeah.
So walk us through that, because so many times people, as you say, they buy an insurance policy, they don't really know what it says, and their primary objective, especially when it comes to life insurance, is like, okay, here's $20,000 or $25,000. This is what my family will bury me with. So how can you use that vehicle to actually build wealth? Explain.
So it can come from different perspectives, but I'm going to start with the base.
Okay.
An insurance policy is a contract.
Right.
So let's just take the word policy off the table.
Okay.
So how you design and ask for benefits in that contract is what your outcome will be.
Okay.
Those contracts can be varied. Insurance companies by their nature, are just managing risk of life. They just manage the risk of your life expectancy. They don't know when you'll leave this earth, but they have averages. So if you are able to negotiate with the insurance company on behalf of your education and understanding that this policy in and of itself will give me and my family access to additional capital, access to large amount of death benefit, access to a leverageable contract that creates net worth. See, let's break that back into understanding that life insurance itself is one of the entities that life insurance industry has that has a tax code attached. That tax code was developed in 1912 and still exists today. Wow. The tax code is 7702. It was in the first section of the tax code IRS book when it was developed in 1910. So when you think about it, the parameters of this were developed before African Americans had the opportunity to even partake.
True.
But they partook as collateral being insured. Now, fast forward to 2021, the opportunity for you to insure and manage risk through these contracts, create a position that is leverageable by the courts. It's not risk. It's not taxable like other investment entities. Although we don't shun other investment entities, this has its place. So if we design this policy where it grows in certain parameters or certain numbers, cash values, death benefits, over the years that you own it, you can leverage it in various ways. I teach people how to leverage it in real estate. I teach people how to leverage it paying off debt. I teach people how to leverage it making future purchases. I teach people how to leverage it by building net worth that's financeable, collateral, in times of an economy where you have the economy that either is soft, where there's financing available for those that have leverageable collateral, or even industries where, economies where the economy is tight.
Mm-hmm. Restricted. Mm-hmm.
Look for people who have certain types of assets to be able to lend, because you have to understand, banks and financial institutions, lenders make money by lending money. So they have to find those that are lendable and those people that are solid in finances. Over a lifetime, these types of products can hold their position because, again, as I first stated, these are contracts. And
Mm-hmm.
contract law, as you're aware, as an attorney, is superseded or is managed in the courts. Tax law is managed in the political realm,
Right.
in the governments, in the local, state, and federal. They can change those laws
Mm-hmm.
on a regular basis. They can implement laws.
Mm-hmm.
The irony is that the tax law for life insurance has been around since 1912. Why hasn't Congress changed it? We always say they must be taking advantage of it too.
Exactly. Exactly. Yep. And that's really interesting because, for my listeners, a lot of them may have been struggling with pulling themselves out of the bankruptcy and moving forward. And just in a conversation with you, I didn't realize that that can be a problem sometime coming out of bankruptcy. Explain that, please.
Well, yeah, bankruptcies will inhibit the ability to get an insurance policy. Insurance companies want to weigh your ability to sustain that contract over years. Remember, we said it's a long-term contract.
Right.
If you get that policy when you're a teenager, sometimes parents buy that policy on 15-day-old infants. They're looking for you to live an entire life.
Right.
In fact, life expectancy has extended. And so insurance policies go to age 121 years of age, when in not too long ago, recent past, they only went up to age 96.
Okay.
So they also look at your financial ability to manage.
Mm-hmm. Mm-hmm.
As an aside, they look at your ability to manage driving a car. They look at your, what do you do? Do you fly airplanes? Are you in the military? Do you do scuba diving? They want to manage risk.
Right.
But one of those risks is your financial ability to manage your own personal money.
Okay.
There are a ton of companies out there that will not take that risk if you had a bankruptcy.
Wow.
But I've been able to, as an independent broker, as a nationwide strategist, find companies that will take people out of bankruptcy.
Wow.
See, what you do is if you gotta wait, as you already know, once your bankruptcy is charged off, you get a second lease on life.
Yes, exactly.
But if you gotta wait to build your insurance life, those years are lost.
Yes.
So you come to a person like myself And we do some pre-underwriting and find companies at that time that are willing to take that risk. And so they look at the details of your bankruptcy. When was it charged off? What type of bankruptcy it was, the literal details, and they have a person in their stead that will evaluate that.
Good to know. Good to know. And so, for my entrepreneur listeners, how can they use an insurance policy to, how can they leverage it to actually make or have, I should say, have access to capital to further their business?
So if you're an entrepreneur, simply and plain, you got to have access to cash flow for your entire existence,
Absolutely.
period. Most of the time, entrepreneurs do two things. They sink every dime that they've created through customer interaction back into their business.
Hmm.
That's a cash flow strategy. Doesn't work too long because you can't pay yourself.
Right.
The other way is that they go and beg the financial markets to give them money
Hmm.
at a certain interest rate. They try to go and establish business credit, which makes sense because that divides your personal assets or Social Security from your tax ID number. You
Hmm.
should do that.
Hmm.
But if you think about big business, big corporations throw off their excess money into what is called a trust department that big business has under their umbrella.
Hmm.
The trust department is a department that takes those overage revenues and they do investments or they put money in certain types of products. A lot of times they put them in life insurance products.
Ah,
There's
okay.
two types of life insurance that banks and corporations own. One is called BOLI, BOLI, bank owned life insurance.
Hmm.
One is called COLI, COLI, corporate owned life insurance. You can look those up. We should be adopting that same strategy as entrepreneurs and small business owners.
Great.
Set up policies. We take the over amount of revenue that we have in our business during the course of the year and build cash values. Those cash values we control as cash flow. And we still have the death benefits or face values in case something happened to us as a business owner in terms of a tragedy. But those cash values, we can then borrow from our policies and we can loan that money back to our business. Just like going to borrow money from a commercial bank, you're the bank and you're the borrower. This time you control both entities, which means that you can actually decide how you want to pay yourself back from your business. How many chances do you get a chance to do that with commercial banks?
Very
You don't.
true.
You don't.
Very true. You surely
But
don't.
once you sweat getting the loan from them and the banker comes knocks on your door because you haven't been able to make a payment, or they put something on your credit, personal credit, because you had to use your personal credit this time, or they put something on your paydex score because you had to use your business credit and couldn't pay back. Now you're impugned into the future financially. But if
Right.
you get responsible in terms of building what we call a financial foundation, and we teach you that, you can borrow money from your policies through a promissory note, pay your policy back with interest, take a tax deduction on the interest payments, just as you would with Bank of America, with
Whatever
other
bank.
banks.
Whatever bank. Right, right, right.
Right.
Wow.
I
This
use that
is
for my private conversations, but at the end of the day, we teach you application and how to sustain yourself for the long haul, how to create opportunities. A lot of our clients was able to pull money from their policies instead of getting a PPP.
right. And see, these are things that I think my audience needs to hear because, most certainly a lot of entrepreneurs were cash strapped last year and even into this year, they're facing some financial challenges. So, Mr. LaBoi, I do not have my podcast very long. I usually try to keep it to 30 minutes. I'm hoping that you will come back another time and give my information, give your information to my audience, because this was certainly enlightening and I appreciate it so much. So let me give you a shameless plug. Tell people how they can get in touch with you, please.
All right. I appreciate you all the time. This is great. You can find me on all the socials under Stephen LaBoi. That's LA capital B as in Brian, ROI. Or you can find me at the LaBoi Insurance Group. There's two I's, I for LaBoi and I for insurance. The LaBoi Insurance Group.com or in any of the social media platforms. We're really out there teaching. You can get on our schedule link through our Instagram and our link tree. What they always say, go to our top of our Instagram and find us. And we look forward to talking to anybody who wants to learn.
That sounds so good. I really appreciate that. And what was the name of your book again? Give us the name of that book.
Yeah. My book is called Build Your Human Equity Line of Credit. Build your human equity line of credit. We trademark that term through the Patent and Trademark Office, human equity line of credit, because we believe in that so important over a lifetime. If you build your human equity line of credit, you can make it in any economy. You can also find us on Amazon, Kindle, and Audible. Again, under Stephen LaBoi or StephenLaBroi.com, where you can find the book and more information about me.
That is wonderful. Thank you so much for being on my podcast. I'm going to have you back again so you can give us some more information that we didn't know.
All right.
All
Thank
right.
you, ma'am.
Thank
Okay.
you.
Take care. Appreciate you. Keep doing good work.
You as well. Thank you. Bye-bye.